so previous bear markets see like an 80 to 85% drawdown, right? So you have two conflicting issues here. You have the fact that no previous bear market has tested the high, and then the 80 to 85% drawdown. So one of them is going to be wrong. This is the first time we have the Federal Reserve tightening aggressively with high inflation. So it does sway me to say, okay, this is going to be the one that takes us below because there's extra issues here that weren't in past.
Alright guys, welcome back to another video from Investment Helper. In today's video, the chief market analyst at InTheMoneyStocks.com, Gareth Soloway, addresses the recent crashes in the cryptocurrency market, specifically the Bitcoin space, the reasons behind it and the possible outcomes. Gareth explains why he believes the Bitcoin crash is not over yet and how the current Bitcoin price fall could trigger a sell-off. He also shares his perspective about Ethereum and why he thinks it will suffer more than Bitcoin in this bear market. Make sure to stick around till the end of this video, where Gareth Soloway predicts the chances of the Bitcoin market bottoming out in 2022. If you like the video, don't forget to give it a thumbs up, subscribe to the channel and turn on the post notifications.
Yeah, I think the first thing that and this is coming from a stock market perspective, is that like it's almost like historical perspective in a market that's been around for 13 years. So I think that's definitely there. I think on a TA basis, and I can show my chart real quick here, is that number one, we're gonna pierce 20 just because everyone has stop orders just below 20 and the markets love to run stop orders, right? So what I'm actually, and this is kind of going in a shorter term basis, is what I think is gonna happen. I think we're gonna get down to like 19.5, maybe 19-ish, and then we're gonna have a snapback bounce. And again, this is that high from 2017 that was like around 19.5 or whatever it was. But I think you have to pierce that, stop out a bunch of individuals, flush them out. You guys were talking already about high volume. That's exactly what high volume does. It flushes out the weak hands. Then you get the reflex bounce to lure them back in at higher prices. Everyone will start saying, oh, the bottom's in. We just hit that high pivot. We're getting a bounce now. And then I do think it's going lower. A couple signals that tell me that, you got the measured move, the classic measured move here. This high down to this low, you take that same distance and it takes you down to 12,000. That's also this pivot point right here. And 12,000 is approximately 80 to 85% correction off 69,000. So there's like lots of things that, and I guess I should throw this out too, is that for me, I look at the stock market and I recognize the coordination where selling in the NASDAQ specifically begets selling in cryptocurrency. We've seen that, right? So I look at the NASDAQ, and the NASDAQ's not even back to pre-COVID highs yet. We're probably going into a recession, which means there's going to be more downside in the NASDAQ. So it's hard to imagine that crypto would bottom here if the NASDAQ's going to fall another 10, 15, 20%. So I definitely think Ethereum, we know it's been weaker, makes sense since Bitcoin's kind of the one that a lot of the big money's been gravitating to, whether it's Michael Saylor or some of these other individuals. But I do think it's got more downside. I think you're probably talking about 815 or so, 830 as being just a near-term low. I am concerned it could even go lower than that. But I will say this, and I bring a little bit of a different perspective because I started as a stock guy. There's definitely signs that I do think people should expect a bounce soon. And if you guys would just indulge me, I would love to just share those with you because it's a little bit of a different kind of deal. So this is the Ethereum chart. This is your next big support on this, right down here at this 820, we'll call it 825 or so. So that's your new next little pivot. But, when you're investing, one of the things that I learned about the stock market is that it's about deciding where your money is better, right? So when interest rates go up, there's a certain amount of people that say, well, now I can get 3% on the 10-year. Why am I taking risk in the market? And they rotate out of risk assets into the 10-year yield. So the 10-year yield, especially in the stock world, is like hugely, hugely important. In fact, the bond market is actually many times the size of the stock market. It is the biggest market out there. So they always say the bond guys know more than anyone out there. So one thing I've been noticing here, and again, it's not a fully closed candle, but if we go to the 10-year, and the reason, by the way, just to reiterate why I'm showing the 10-year is because if the 10-year has topped and if interest rates start pulling back, then risk on becomes intriguing again. People start saying, well, now I can only get 2% or 1%. So I'm going to go back into stocks. I'm going to go back into crypto. And what you're forming here, and I'm sure all the TA guys on here know what candle this is. This is a weekly topping tail potentially forming on the 10-year. So if you're putting in a top on the 10-year, and let's say the 10-year starts coming back in, that does signal a potential near-term rally in crypto, in stocks, and so forth. And I love kind of converging technicals. So one of the things I just was looking at, I was like, all right, let me play around with trend lines. I'm a big trend line guy. What if I connect this high to this high? What happens, right? Well, look at that. It goes literally right to the highs that actually were put in today and yesterday on the 10-year. So now you have a trend line of resistance plus a potential topping tail. Maybe that signals a sell-off, which again, I think everyone agrees, maybe we go to 19-ish, 19.5, somewhere in that, then maybe you get a technical bounce. The other thing, and I'll keep it short, is just to watch the dollar, remember? So gold, crypto, they generally will trade inverse to the dollar. You know, the weaker the dollar, the less it's worth. In theory, crypto, Bitcoin should go higher, as should gold and other commodities as that. So if we go to the DXY here, the DXY just is hammering on this upper. And by the way, the dollar, this is the dollar chart. The dollar has been ripping up all year long, really, actually since 2021, which has been putting extra pressure on crypto and on other assets that are traded in dollars. But the idea here is if you go back to 2015, you're definitely at the high end of this channel. And it makes me think that, okay, now the dollar could weaken, let's say for the next couple months, maybe Bitcoin can rally, you know, just back at least to 30,000. And the cool thing about that is if you go to 19 or 20, 30 is 50% return, right? So, I mean, again, it's all relative to where you're in, obviously, but just a couple notes on just a couple interesting little things there. I think that investors should kind of keep in mind is that there's other things to look at besides just the chart of Bitcoin or just the chart of Ethereum that will actually have an impact and sway your decision making. You know, just looking at the cycles from past ones, usually it takes about 12 months for Bitcoin to bottom. So you're looking at November-ish, December if it's replicating past cycles. Then usually it chops around for 6 months plus and before it actually starts to have that next run. Now that's all assuming that everything is the same as last cycles, even though we know it's not with the Federal Reserve doing what it's doing. In terms of the stock market, right? So looking at the stock market, you have to say to yourself, where is this ultimately going? Yes, I do think a depression-ish, you know, massive recession is in the cards. But the one thing I've learned is that it always takes longer because the government and the Fed are always there to try to help until they can't anymore. So what I mean by that is that what's going to probably end up happening is later this year, the economy will start slipping towards recession. Already you're seeing prices starting to peak out. Oil is starting to top out. I think oil, because you're going to have a recession, people are going to drive less, travel less. That's going to bring oil back in dramatically. That's going to help lower inflation. So my guess is that, yes, we have a depression in the cards. They say every generation has to experience one. Well, you know, the last people that experienced the 29, 30s, unfortunately, there's not a lot of them left anymore. So I do think that's coming, but my guess is it comes around the 100-year cycle, just like COVID with the Spanish flu. So I am into cycle work. I know a bunch of you guys are as well. And we know that the Spanish flu was 1819, and here we had COVID 2020 and so forth. So it's probably later this decade, which tells me the Fed, when inflation comes down and unemployment spikes, which it inevitably will, gets to 5, 6, 7, 8, 9, 10%, they're going to say, well, inflation's only 4 or 5% right now. Unemployment's 12%. Well, we got to print money and save that side. You know, that's the tough side right now. Then inflation spikes, and then they're like, okay, now we have to pull back on it. And eventually it's gonna have no impact, and it's just gonna all implode later on. But my guess is that it's probably still a ways away, which may coincide with the epic run of Bitcoin to a 500,000 or a million, maybe later this decade.
That's it for today, guys. If you found this video useful, then don't forget to like the video and share this knowledge with your friends and family. And don't forget to check out the full video, link is in the description. Thank you.